Hello students, in the previous sessions you have learnt the procedure of preparing the trial balance from ledger balances. In this session you will learn the process of preparing the final accounts from a trial balance. Every business organization wants to know the result of its activities at the end of the year. To calculate the profit or loss of an organization, final accounts are prepared at the end of each accounting year. These include trading account, profit and loss account, and the balance sheet. The trading account is prepared to calculate the gross profit of a business. The trading account is a nominal account, so all the expenses are debited and incomes are credited. In trading account, all the direct expenses and direct incomes are shown. On the debit side of the trading account, expenses like opening stock, purchases, wages, and carriage inwards are shown. On the credit side of the trading account, items like sales and closing stock are shown. When you balance the trading account, the result is either gross profit or gross loss. If the credited items are more than debited items, then the result would be gross profit. If the debited items are more than credited items, then the result would be gross loss. The purpose of preparing the trading account is to calculate the basic profitability of a business. It means that the businessman wants to know whether he is able to make enough profit to cover his basic expenses like purchase of raw material, wages, and other direct expenses. Once gross profit is calculated, the next step is to prepare profit and loss account to calculate net profit. Profit and loss account is also a nominal account where expenses are debited and incomes are credited. All the indirect expenses, or otherwise called administrative expenses, are shown on the debit side of the profit and loss account. All the indirect incomes shown on the credit side of this account. On the debit side of this account, expenses like salary, office expenses, advertising are shown. On the credit side of this account, items like gross profit, discount received, and commission earned are shown. The result of this account is net profit or net loss. If the credited items are more, then the result would be net profit. If the debited items are more, then the result would be a net loss. The net profit or net loss is an actual profit or actual loss after considering all the incomes and expenses. Once the net profit is calculated, the next step would be to prepare a balance sheet. The balance sheet is a statement of assets and liabilities. This is prepared to ascertain the financial position of a business at the end of the accounting year. In the balance sheet, all the liabilities are shown on the left side of the statement and the assets are shown on the right side of the statement. The liability side of the balance sheet consists of capital, net profit, and other liabilities. The asset side of the balance sheet consists of fixed asset and current asset. The final accounts are prepared by taking the ledger balances from the trial balance. But some items are not recorded in the trial balance on the date of preparation of final accounts. This information would be available as adjustments. Since these adjustments are not recorded in the books of accounts, they have to be given two effects. It means every business transaction has two accounting aspects, debit and credit, but the adjustments are yet to be recorded in the books of accounts, so they are to be shown twice in the final accounts. Now I'll explain the treatment of certain adjustments. Closing stock. This is the amount of stock the business has at the end of the accounting year. It has to be shown on the credit side of the trading account and on the asset side of the balance sheet. Outstanding expenses. These are expenses which are to be paid in the accounting year but not yet paid. It has to be added to the concerned expenses in the trading or profit and loss account and it will be shown on the liability side of the balance sheet. Prepaid expenses. These are expenses which are paid in advance. It means the expenses for the next accounting period is paid in the current accounting period itself. It has to be subtracted from the respective expenses from the trading or profit and loss account and shown on the asset side of the balance sheet. Income accrued. These are incomes which are earned in the accounting year but not received by the business. It has to be added to the incomes in the profit and loss account and shown on the asset side of the balance sheet. Incomes received in advance. These are incomes of the following accounting year but received in the current year itself. It has to be subtracted from the incomes and will be shown on the liability side of the balance sheet. Depreciation. depreciation is a gradual reduction in the value of assets due to wear and tear, passage of time, etc. It has to be shown on the debit side of the profit and loss account and will be subtracted from the concerned asset in the balance sheet. Bad debts. This is the amount of goods sold on credit on which money cannot be recovered. Bad debts, if it is given in the trial balance, it will simply be shown on the debit side of profit and loss account. But if it is given as an additional information, it has to be first shown on the debit side of profit and loss account, and it will be subtracted from the debtors on the asset side of the balance sheet. Reserve for doubtful debts or provision for doubtful debts. This is the provision or reserve created for future bad debts. It will usually be given as a percentage on debtors. It has to be calculated on debtors after subtracting bad debts, if any. Once it is calculated, it will be shown on the debit side of profit and loss account, and in the balance sheet it will be subtracted from debtors. Reserve for discount on debtors. This is the amount of profit set aside to cover discount that the business has to allow to its customers or debtors in future. It has to be calculated on debtors after subtracting bad debts and provision for bad debts, if any. Once calculated, it will be shown on the debit side of profit and loss account, and in the balance sheet it will be subtracted from debtors. Reserve for discount of creditors. This is the expected discount that the supplier or creditor would give to us. It is calculated on the creditors. It will be shown on the credit side of profit and loss account, and in the balance sheet it will be subtracted from creditors. After making all these adjustments, the balance sheet must tally, or in other words, the total of liabilities and assets would be equal. With this, we have come to the end of this session. I hope all of you have understood the concepts of final accounts. Goodbye.